Welcome back to the deep dive. We're your shortcut to being really well informed. Today we're diving into Bitcoin. It's kind of stuck, isn't it? Just bouncing around price-wise, sort of like ping pong, really unable to pick a clear direction. So our mission here is simple. Explain why. Why this volatility? Why this loop? We've looked at the charts, the indicators, and what seems clear is this powerful stalemate. Bitcoin's hitting this serious resistance around $116,000, but the market, it just seems unwilling to push through until two huge non-crypto things get sorted out this week. We're talking the Fed's FOMC decision and those crucial U.S.-China trade talks.
Yeah, that's exactly it. It's a classic situation, really. You've got these technical trading limits meeting head on with massive global economic forces. And for you, the listener, understanding that tension is, it's key right now. There's this very clear ceiling of price traders just won't go above. And that technical limit, it's being reinforced by all this huge external uncertainty. So until that lifts, caution is the word.
Okay, let's unpack that $116,000 sticking point first. If you watch the charts, this isn't exactly news, but for everyone else, let's make this resistance idea simpler. Think of that $116,000 level. Think of it like a solid brick wall. The buyers, the bulls, right? They want the price higher, but they keep hitting this wall of sell orders. They push up during the day, bump against it, but they just can't seem to get the buying power, Not enough to get what traders call the daily close above that line. And they need that close to prove it's a real reversal, it's a sustainable move up. They need to break the wall, not just tap it.
Absolutely. And the charts, they really show the effort involved. The market's burning a lot of energy, only to get pushed right back down. We have pretty clear evidence that sellers are actively capping every little breakout attempt above $116,000 recently. It's not random, it's intentional. Big players setting a barrier. And if you peek, under the hood at the exchange order books, you can actually see these walls of asks, big sell orders just sitting there. So you see 11610K acting as that obvious ceiling on Coinbase spot where people buy actual Bitcoin. But what's maybe even more interesting is the slightly higher resistance, like between $117,000 and $118,000. That's on Binance perpetual futures, which, for anyone unfamiliar, are basically these leveraged bets. High stakes, no expiry date. Seeing that pile of leverage selling pressure there, it shows the pro money is betting pretty hard against prices holding above 118K, at least until these macro things resolve.
So it sounds like until one of those big external events gives some clarity, the price is basically trapped, locked in this tight range, bouncing between that 116K wall and the support around $110,000.
Pretty much. It's a holding pattern, but a pretty tense one.
Right. Now, here's where it gets really interesting, I think. This price ceiling isn't just code or bots. It's about a clash, a real conflict between different kinds of investors. We're seeing a very different playbook from the pros, the institutional types, compared to the smaller retail investors.
Exactly. The data makes it quite clear. Two opposing strategies happening right now. Reports are showing the bigger players, the whales, moving like $1 million to $10 million chunks they're actively distributing, which is basically trader speak for systematically selling their coins into these price rallies, taking profits whenever eager buyers push the price up. They're helping keep that ceiling in place.
Okay, so the big fish are selling the rips.
Right. And conversely, the smaller retail investors, the ones placing orders like $1,000 to $10,000, they're doing what retail often does. They're buying the dips, especially in the spot market. They see $110K and think, okay, bargain time.
But there's a catch there, isn't there? Especially with futures.
Oh, definitely. Because the retail crowd is also pretty heavily into leveraged futures. And that's where they're getting hammered. Liquidations. Big ones.
Yeah, that's the painful part. You might buy a bit on spot. Is fine. But if you're leveraged 10x in futures, that's risky. What exactly is happening with those leveraged positions now?
It's kind of a domino effect. We've seen data showing this tight bunch of leveraged long positions bets on the price going up, all clustered between $112,000 and $113,000.
Right.
So when the market dips just low enough to hit those levels, bang. The exchanges automatically close those positions out. It's forced selling to protect the exchange, yeah. But it means those coins get dumped back onto the market instantly. It creates this sudden selling pressure.
So the liquidation itself pushes the price down more.
Exactly. It wipes out the leverage and undermines any upward push the spot buyers were trying to build. So essentially, the bigger professional futures traders, they're either just taking risk off the table ahead of the news, or maybe they're actively adding shorts, betting they can nudge the price down just enough to trigger those 112K liquidations. Create a little downward spiral, it's tactical, and usually the pros have the edge there.
Wow. Okay, so that internal market fight would be enough on its own, But what's really putting the brakes on any big move, it's these two massive external events, right? Totally outside crypto.
Yeah.
And traders are just pulling back, reducing risk because these outcomes are so uncertain but potentially huge.
That's right. Massive global implications.
So to grasp the hesitation,
Yeah.
maybe think of it like waiting for the referee's whistle. You know, in a big game, the traders, they're all positioned. They know where the 116K goal line is.
Yeah.
But they won't make that big game-changing play until the global ref, central banks, world leaders blows the whistle, makes the call.
That's a good analogy. They're waiting for the signal. Jumping early could be disastrous.
Because you risk a penalty, basically.
Precisely. And those two whistles, they're coming back to back this week. First up, Wednesday, we've got the FOMC meeting. That's the Federal Open Market Committee in the U.S. Fed. They set interest rates.
And the market expects a cut.
Generally, yeah. The expectation is for a 25 basis point cut. It's been talked about a lot.
Yeah.
But just the act of traders adjusting positions before any big announcement like this, it always causes jitters. Standard procedure, really. Drives hesitation. Plus, it's not just the cut itself, it's the language the Fed chair uses, their outlook. That often matters more. Even an expected cut could spark volatility if the forward guidance sounds, too cautious or too aggressive.
It really shows how interconnected everything is now, doesn't it? Decisions made miles away about interest rates holding Bitcoin's price in check.
Absolutely. Bitcoin isn't in its own little bubble anymore. It's a global macro asset now. And then the second big one, Thursday, the U.S.-China Trade Summit, Trump and Xi Jinping meeting. This carries enormous geopolitical weight. If the market likes what it hears, sees a path to stability, risk appetite could come flooding back.
But if not?
Well, if the talks break down or the deal looks bad, then you could see negative reverberations, as the analysts call them, rippling across stocks and hitting crypto hard. It doesn't matter what the internal crypto signals are saying then.
So bottom line, these macro events are like the pressure release valve. They'll decide if the market gets confident enough to finally smash through that 116 brick wall, or if the uncertainty just sends it bouncing back down towards $110K again.
Yeah, but despite all that caution, the resistance, the macro risks, we really shouldn't ignore the positive signs under the surface. There's underlying resilience here. I mean, fundamentally, Bitcoin has shown some real strength. Since that big liquidation crash back on October 10th, the price has actually managed to rally, 13%? That's pretty significant recovery.
That is a strong bounce back, considering how ugly that sell-off was.
And are we seeing money flow back in, too? Like, are the bigger players stepping back in despite the 116K wall?
We are seeing signs, yeah. Take global exchange open interest, that's basically the total value of active futures contracts. It tanked to around $28.1 billion right after that October crash, but it's climbed back up to nearly $31.5 billion now.
So more traders are willing to place bets again.
Exactly. Now look, it's still a ways off the peak. It was over $40 billion when Bitcoin was much higher, near 125K. But the speed of that recovery, it suggests capital is kind of coiled, ready to jump back in as soon as the uncertainty clears. Shows some professional confidence returning, even with this short-term ceiling.
And what about the ETFs, the spot Bitcoin ETFs?
Yes, that's pure spot demand. Real buying pressure from likely more institutional types. We saw over $260 million in net inflows across just 3 recent trading days. But the really telling one, a massive $477 million inflow on October 21st. And the key part is that happened right after Bitcoin's price dipped below $108,000. Wow. So when the price got weak, institutions saw it as a buying opportunity.
That's what it strongly suggests, yeah. They seem to be using this volatility, maybe caused by liquidations or macro nerves, as a chance to accumulate.
Like they see the short-term chop as just noise, but believe the long-term floor is pretty solid.
He certainly looks that way. That dip below 108K was bought up very quickly.
Okay, so let's wrap this up. What's the main takeaway for you listening right now?
Well, this Bitcoin price action. It's a complex fight on 3 fronts, really. You've got that tough technical resistance, the 116K brick wall. You've got this internal clash pros selling, retail buying the dips but getting liquidated. And it's all sort of on hold, waiting for these 2 huge global events, the Fed's decision and the U.S.-China outcome, the next few days. Absolutely critical for where we head next. And maybe a final thought to chew on, considering that strong underlying spot demand we see in the ETF flows, and it's a big if these macro risks resolve positively this week. The Fed sounds okay, the China deal looks good. How fast could the market blow past that 116K resistance? Or will the pros just use any good news as one last chance to sell into strength, keep us consolidating a bit longer? Something to watch.
Definitely something to watch. That's a great point to end on. Thanks for taking this deep dive with us today. If you found this breakdown helpful, Please do follow, like, and share it. And yeah, if you want to keep up with all our insights, please follow What Bitcoin Taught Me. We're on Twitter X, Nostr, Blue Sky, Threads, Instagram, Facebook, and LinkedIn. We'll get you on the next deep dive.